Hello, welcome to this weekend's technical analysis video for what will just be silver this weekend. It is weekending February the 17th, 2012. Today is the 19th of February. And if you may have seen, you may not have seen on the YouTube section that they're changing their privacy policy. This stuff matters, as they say. You can click on the Learn More button. You can click on the Dismiss button. I refuse to click on this, and I will not. I have clicked on the Learn More, and quite frankly, I am not a big fan of their new policies starting March the 1st, 2012. Also on the 7th, they are basically forcing people into the new design, as I've stated here. Channels are forced into the new design. If having what seems to be random videos subject to a maximum of 200 characters on comments and being forced into a design makes me sick, which is forcing me into a very difficult decision, as the most probable is finding some other site, whether it be Dailymotion, Zipcast, and work it within there. Also, if you go on Chrome, you might see this on the upper right corner of the screen. If you're like me and you don't sign in, you are not signed into Chrome. You are missing out. And again, I refuse to link the Google pages together, which most likely is going to result into using Google as little as possible. So whatever site I happen to move this on, what I liked about Zipcast when they originally did it was that you could upload audio, video, and photos. And the photos would work out really, really well, considering what I do. What I would really like is like a virtual, like a Office PowerPoint sort of presentation where you could just look at maybe 12, 13 photos that I have ready, and you can push the forward button whenever you're ready. Because what I've done a few times is I put up videos or photos with music in the background. Then I have to guess how long you want to look at a photo for. Well, maybe you want to look at this for 17 seconds, so we'll put it on for that long. Quite frankly, that doesn't work. Some people need to look at it for longer. And a situation where I could put a platform where I could put like 17 photos together and you could click in some sort of order would probably work the best. But that's where it's leaning towards. Zipcast was down for a little while. It's back up. I put a video out yesterday. Just took one of my older videos. One view in the last 24 hours on it. So it's really not that popular. But quite frankly, that's not what I'm looking for either. So let's now move on to this weekend's analysis. And let's start off within the weekly time frame. The other charts that I've got that have the 18 period moving averages in the upper bands, unfortunately this week the program crashed on me, and it's not that big of a crash because all I lost were the charts. I didn't lose the data, and the charts are easy to make, but I want to redo them anyway, so this weekend they're not going to be coming into play. I'm going to zoom in on this chart now because I wanted to show you basically what's going on right now. Right in here. 3 weeks, 3 consecutive weeks with extremely low volatility. Well, basically, I said last week that we had 2 straight weeks of under 5%. Well, you can now make it 3. This week did make a lower low and lower high from the previous one, but quite frankly, just barely. Now, I've gave out a few levels, at least in the previous videos. 33.5 area, and I said 33.58 is one of them as a significant level. And basically, it's consolidating within that mark right now. Because basically, these 2 lines in here represent significant Fibonacci from this breakout low and this high. So therefore, because it's still holding above here, that means the market has not switched over into that of a bearish market, and it needs to break above this level here for it to resume its bullish trend. Right now, it's on a pause standstill. How long can it stay in these pause standstills for? I can't answer that question, but I can tell you right now that that was quite long in here, especially from this point in here, because we had, what was it? Let me just zoom in on this as well. This is going back to 2010. So there was seven consecutive weeks in here like we encountered, or we are encountering right now. Let's now, let's go to the same chart, but just more candles, basically. So basically, when we take a look at this, key thing is going to be getting above this trend line. Because quite frankly, this is a correctionary phase because 26 an ounce has been holding. Not only is it correctionary phase on 26, that's just based on this breakout low. Based on this mark in here, the move that we have encountered has still kept it bullish because the first Fibonacci level from this low and this high is like 25 something, like right down in here. And it is still above that level, keeping the market bullish. I've also stated, as far as time is concerned, that the duration of time from here to here is, well, you can see that the bear market has been longer than the entire bull market itself. So the rate of ascent, or let me just do the rate of descent now. What we'll do is, I think this is we'll just draw a little triangle on here. So we'll do a little triangle. What we want to do is we want to match this up with the trend. This is basically the essence of trend on the downside. So the reverse of this, quite frankly, would be this in here. Let me just redo that again because I want to move the line, make it big enough. So there's a matching reverse line for basically the opposite of this downtrend. Now, this is the trend that we've had on quite a few occasions, basically. So it's the same trend, basically, as the uptrend that occurred from within here and here. But obviously, the rate of ascent that occurred from August to, for about less than a year, basically, this was the rate of ascent. So the question is, could we get back and do that same rate of ascent again? Well, we could even break that rate of ascent because really that set the barrier for what could and basically should happen again later on. Now let's move this on to the monthly chart, and there's no dates on here, and I really want to go over this volatility because, quite frankly, the movements that we've gotten here, this is extremely tiny, this chart, because we've had the 3 weeks doing nothing. So right now, the month of February right now is doing pretty much nothing, on idle, on standstill. So the current volatility right now, this is where you take the highest level, subtract the lowest level to get the difference for the period, and divide it by the lowest level. Currently, for the month of February, it's at 5.76%. The last time we've had a month lower was June of 2003, which was 4.74%. And it's not even on this chart. This is going back to like 2004, 2005. Over the last 100 months before the one we're currently in, the average volatility movement is 17.97, basically 18% moves. The median move is about 15.1%. The largest move was 66.28%, which is this one in here, the September candle. And the slowest one was July 2005 at 6.32%. So most likely with, how many days do we got left in the month? We got a week and a half. We got 8 trading days left before the month is over. It should get above 6.32%, but you don't know. If we have the same thing like we had back in 2010, well, maybe it's going to stay below the 6%. Again, I don't know, but volatility is low. We're at a standstill, and the longer volatility is in play, the more the markets crunch together, the bigger the breakout or breakdown usually tends to become. Alrighty, what I'm going to do now is I'm going to talk about silver in two different markets. Let me just get the move this so it looks good. Okay, basically what this is, I'm taking a look at silver on SLV and its time frames on U.S. soil, or from 9:30 a.m. to 4 p.m. and opposite. So this is how the chart would have started to look, or this is the last 9 days. I'm going to basically move back in time. This is how much silver has gained since SLV has become into play, which is about 5 times higher, from 4 o'clock until 9:30 a.m. And then from 9:30 a.m. to 4 p.m., it's actually lost half its value. So this is just over the last 9 days. If we move it over the last 60 or so, it's like a race, basically. Who's going to win the race? Right now, the non-U.S. soil is doing pretty good, I guess, and over about 160 days. And then again, and again, and there we go, and there we have it. So right off the bat, the race was obviously decided early on, and yeah, silver doesn't do too well on U.S. time frames, plain and simple. Now, obviously, from this point here, which is the 2008 bottom, it's in a winning position because what's this? About 30 from 33.5. It's basically went up about 50% on U.S. soil from this time frame. Now back here was about $1.75 up to about 5, so it's doubled on U.S. soil, and it's like tripled on non-U.S. soil, basically. So therefore, during open hours, this is from 9:30 to 4 p.m. Eastern Time, there have been 716 up days and 727 down days. You can see the median up days and average on the top of the screen as long as the biggest one. But what's interesting is there are 51 days greater than 3% and 6 greater than 5%. But as far as downside of equal movements, down 2.92% is 74 and down 4.8% is 22. So they usually crush the market more often than they really rise the market to the upside for big moves. Now, why would I use 5% and negative 0.48? Now, there should be a negative sign below this 4. Why would I use positive 5 and negative 4.8? Well, just imagine any type of index or stock that loses 4.8 and gains 5%. It doesn't matter which one's in the first order, you will notice that they're right back to square one. Because if you go up 5% from 100, then you would go to 105. Now, if you lose 5% on 105, well, then you'll lose 5.25. So you'd be constantly developing a pattern of lower highs and lower lows, and that's why I have it set within this ratio. But again, more times than not on big moves, it's to the downside. Now let's take a look at this on non-U.S. hours. This is from 4 o'clock p.m. Eastern to 9:30 a.m. the next day. 814 up days compared to 632 down days. Interestingly enough, as far as big up days and down days are concerned, greater than 3%, there's more up days than down days compared to the last one, which had 51 and 74, and 6 and 22, where this one has 60 and 56, and 9 and 18. Generally speaking, markets going down, it's more often that they'll have those more volatile big smackdowns than a regular lower high, lower low kind of pattern, where for bull markets, it's more common to have the higher high, higher low patterns in comparison to smack ups. Is that how you call the opposite of a smackdown would be a smack up? I don't know. I just thought of that right now, so I said it. Anyway, this is what the SLV markets look like from that time frame. Now, what's interesting is I've talked about the gold, the LBMA hours, which is from it's from 4 o'clock a.m. to it's 4 a.m. to noon Eastern time. That's the LBMA hours, and I I'm looking at silver right now from, January 13th. If you have any older hourly data for silver or what the price was at 4 o'clock in the morning, I'm like sleeping about 100% of the time at this time frame. But if you got the data before that, it would be muchly appreciated. Because the way I look at it is gold's down like 90%, 80 plus percent on this time frame of 4 a.m. to noon. And that's starting when the price was $35 an ounce. It's lost 90% when the entire underline has gained like 60 or 70 fold. It's down huge. So I'd only presume silver's the same way. So the way this looks like to me, at least with gold and probably definitely with silver, I don't have the long-term silver data, it's like a relay race where you have the most fit, greatest athlete in the world moving from nude to 4 a.m. the next day, and then you got somebody who eats donuts 12 times a day who's running from 4 a.m. to noon. It's like the biggest mismatch in the world. And I only presume that probably since 1968, that silver is also down significantly from its $1.20 level or $2 level of 1968. Now, I did have data earlier on, which is from February 22nd to June 19th, 2011, because back then I was doing data on the hourly time frame, and I stopped doing it on June 19th, basically, and I switched that from the shortest time frame to be quarter day. And before, when I was looking at this data back in the summer and spring, I was looking for time frames, and, well, I never did figure out 4 to 12. What I did figure out was that the SmackDowns usually occurred between 8 a.m. and 10 a.m. That's what I figured out before. And then usually on most days, it seems that they crash the market starting at 8 or 8:30 or even sometimes at 9. And then the market will bottom about usually like 10 or 10:30 or so. The market will bottom. And usually the last hour and a half until 12 o'clock, the market does fairly well. That's what I noticed within this time frame. But we can see from February 22nd to June 19th that the silver priced on the hours of basically noon to 4 a.m. the next day gained about 25%, where it lost about 15% from 4 o'clock to 12 o'clock. So I find that very, very interesting. Now, as far as silver and two markets concerned, we're going back to the SLV again from February the 1st, 2010. The silver market has pretty much doubled in the time frame of non-U.S. hours from 4 o'clock p.m. to 9:30 a.m. And on the U.S. time frame, it's pretty much broken even with a small gain. Now, I do have time frames of what silver trades at 9:30 a.m., 12 o'clock, and 4 o'clock every single day going back to February the 1st, 2010. So I thought it would be interesting, just looking at this section here, the blue one, how it does from 9:30 to 12 and from 12 to 4. And quite frankly, silver is up 23.2%. This is as week ending February the 10th. I didn't get the new data this week. It was kind of pointless because nothing really happened anyway. But from 9:30 to 12 o'clock, it's up 23.2%. But from 12 o'clock to 4 o'clock, it's actually down 11.6%. Quite frankly, I find that extremely surprising. So I'd like to thank everybody for watching this video, and take care. Bye-bye.